The average person spends roughly 90,000 hours of their life working. Yet when that piece of paper or digital PDF arrives at the end of the month, most people look at exactly one number, the bottom line. You see what hit your bank account, feel a brief moment of relief or frustration, and close the file. But that document is more than just a receipt for your time. It is a legal record of your value, a map of your contributions to society, and quite often, the place where your hard-earned money goes to hide in plain sight. To truly understand your payslip is to understand the mechanics of your financial life. At the very top, you have the basics: your name, employee ID, and tax code. Most people ignore the tax code, assuming the government has it right. This is your first mistake. Your tax code is the instruction manual you give your employer on how to treat your money. If it is wrong, you are either underpaying and building a debt that will haunt you later, or you're giving the government an interest-free loan that you won't see back for a year. It tells the system how much you can earn before the taxman takes his first bite. Then we move into the gross pay section. This is the theoretical version of your wealth. It is the number you agreed to in your contract, the one you brag about during interviews. It includes your base salary, but it also captures the variables that represent the extra mile you ran. Overtime, bonuses, commissions, or shift differentials live here. If you are not auditing this every single month, you're essentially trusting a software algorithm with your livelihood. Mistakes happen: input errors, missed clock-ins, or misinterpreted holiday pay. Gross pay is the raw material of your income. Everything that follows is the refinement process. The deductions column is where the story gets complicated. This is where your gross pay is dismantled. The largest slice of this pie is usually income tax. It's easy to view tax as a monolith, but it's actually a series of thresholds. You aren't taxed on every dollar at the same rate. You have your personal allowance, then the basic rate, and perhaps the higher rates. Understanding these brackets is the difference between fearing a raise and pursuing one. The tax trap is a common myth. Earning more will almost never result in taking home less, but it will change the efficiency of your earnings. Next comes the social insurance or national insurance contributions. These are the payments that qualify you for the state safety net, pensions, unemployment benefits, and health care. While it feels like another tax, it's technically a premium for a social insurance policy you're forced to buy. Alongside this, you might see student loan repayments. For many, this is a graduate tax that lingers for decades. It's calculated based on what you earn above a specific threshold, not on the total balance of the loan. It's a unique kind of debt that behaves more like a subscription service to your own education. Then we reach the section that represents your future self: pension contributions. This is perhaps the most important part of the payslip that people overlook. In many systems, if you put in 5%, your employer matches it. This is the only place in the financial world where you get an immediate 100% return on your investment. If you see a zero in this column, you're essentially turning down a pay raise that your employer is legally obligated to give you. The money taken here is often pre-tax, meaning the government actually helps you save by taking less tax from your remaining pay. It's the most efficient way to build wealth, yet because it reduces the number at the bottom of the page today, people often view it with resentment. You might also see benefits in kind or salary sacrifice schemes. This could be anything from a company car and health insurance to a cycle-to-work scheme or gym membership. These are often tax-efficient ways to pay for your lifestyle. By taking the cost out of your salary before tax is applied, you're essentially buying these services at a discount. However, they do lower your gross taxable income, which is a double-edged sword when it's time to apply for a mortgage, as lenders often look at that top-line number to decide how much you can afford. Now we look at the year-to-date figures. These are the cumulative totals of everything you've earned and paid since the start of the financial year. These numbers are your diagnostic tool. If your year-to-date tax looks disproportionately high compared to your year-to-date earnings, it's a red flag that your tax code is wrong or that a one-time bonus was taxed as if you earned that much every single month. The system is often reactive, not proactive. It assumes the current month is the new normal. Monitoring your year-to-date figures allows you to spot trends and prepare for the end of the tax year. Finally, we arrive at the net pay. This is the take-home pay, the actual fuel for your life. It is the number that pays the rent, buys the groceries, and funds the dreams. But when you understand the journey from gross to net, this number changes meaning. You realize that your cost to company is much higher than what you see, and your value produced must be much higher still for the company to remain profitable. Understanding your payslip transforms you from a passive recipient of a paycheck into an active manager of a microeconomy. You start to see where your money is being optimized and where it is being wasted. You begin to ask the right questions. Why is my tax code different this month? Am I maximizing my pension match? Is this benefit actually saving me money? Most people treat their payslip like a receipt from a grocery store. They check the total and throw it in the bin. But your payslip is a monthly report on your most valuable asset, your time. When you stop squinting at the bottom line and start analyzing the columns above it, you reclaim control. You realize that the government, your employer, and your future self are all stakeholders in your career, and you are the chairman of the board. You are no longer just working for a number, you are managing a complex financial engine. The next time that notification hits your inbox or that envelope lands on your desk, don't just look at the net, look at the logic. Look at the deductions. Look at the future you are building. Because once you finally understand your payslip, you finally understand the true price and the true value of your work. Awareness is the first step to wealth, and that awareness begins with the very document that defines your financial present.